Hey, it's Dan Moralez, America's Mortgage Man. This is Homebuyer Radio, episode number 140. I can't believe we've actually done 140 episodes of this podcast. This has definitely been a labor of love. Here's the thing: is like I never run out of content because having done this for the 28, 29 years, I run into all kinds of stuff on a daily basis, and those stories really help to fuel this podcast, and really they give me great content. I tell folks I feel like I'm a professional problem solver. Right? Like my job is to solve the problems that oftentimes you as a client didn't even realize you had as part of this mortgage process. And I talked about this in a couple of the episodes, going back a couple episodes, talking about the problems you have with getting a mortgage approval that you don't even realize that you have as part of getting a mortgage approval. But I love solving problems, right? And, I like to talk about the stories and problems that we have in helping a client across the finish line. So one of the things that I run into a lot, and this is a pretty regular basis, is I get a lot of clients who are self-employed. So you're somebody who's recently started a business, you're self-employed, and you want to get a mortgage, and you're concerned about, how can I, get a mortgage if I just started my own company and so on. That can be a challenge, right? There's a number of factors that go into, how a mortgage gets done or gets approved. One of them being, of course, your employment or your source of income that you have as part of the transaction. Now, for somebody who is self-employed, there's some different rules of thumb that typically kind of apply across the board. The typical rule of thumb is you generally have to be self-employed for at least 2 years as part of the mortgage process. Ideally, what the bank's looking for is they're looking for those most recent 2 years tax returns. And generally what we're going to do is we're going to average those 2 years of tax returns as your proof of income, if you will, okay? So you can have, let's just say, 1 year that's lower than the other. So maybe 2 years ago you had, $50,000 in income. Maybe last year you had $75,000. What the bank's going to do is they're going to take that $50,000 and $75,000 and typically average it over the course of 2 years to come up with an income number, okay? Let's just say 2 years ago your income was $75,000 and the most recent year is $50,000. In that case, we're generally going to take the $50,000 and average that over the last year, not the last 2 years, because your income is downtrending in that case. An underwriter is oftentimes going to look a little bit closer at your file too if you have income that's downtrending from, let's say, previous years and so on. They may ask you to write a letter of explanation why your income is downtrending, and they're just going to look at your overall ability to repay probably a little bit closer to make sure that you can truly sustain being able to make the mortgage payment when it's all said and done. Okay. Now, when it comes to proof of income, if you've been self-employed for 5 years or longer, a lot of times you can get away with just 1 year's worth of tax returns as opposed to 2 years. Now, I've had clients, and this is something that I've had regularly. I've had clients who have been told no by another bank. They said, I don't make enough income, I don't qualify, blah, blah, blah. The problem that most people who are self-employed have is a lot of times you are dealing with a mortgage loan officer that doesn't understand how to read your tax returns to accurately figure the amount of income that you have as part of the loan approval. I see this all the time. I can't tell you how many times I have made loans to clients who are self-employed and have been able to properly document their income in such a way that I can show enough income to qualify them for the mortgage where they've been turned down by 2 or 3 other places. Quick story here. So I have a realtor, a real estate agent that owns multiple investment properties. He got sent my way from another realtor. He was, if you will, being turned down by multiple lenders in an attempt to purchase another investment property. The one lender that he did find that would do the transaction was able to get him approved at like a 12% interest rate, which is really high, right? So that realtor and I got connected. So, okay, let me get through your tax returns, give me all the information, the correct information, so I can truly figure out what your income is. Because I knew how to structure his loan and how to figure out his income, I was able to get him approved for a regular conventional mortgage where everybody else either got him denied or the one lender he found that would do it would give him an interest rate of 12%. So it matters who you work with and their level of expertise. Here's the thing, so when it comes to, self-employed borrowers, the technical competency in the mortgage industry is so bad that they've developed software where you scan in a set of tax returns, and that software will come through and tell you what the quote-unquote income is that you use to qualify the borrower for the mortgage. The problem with that software, as with most things, is it's not always right. Oftentimes, it'll give you a number that is wrong or lower than what it would be if you actually calculated it by hand and knew how to ask the right questions to really understand the client's business, so you could connect those dots and really put those pieces together so it makes more sense. The other trend that we're seeing a lot of in the industry is we're seeing a lot of these what are called bank statement loans. So as a loan officer, I lack, let's say, technical competency. I don't know how to get your loan approved because I don't know how to calculate your income. So I'll tell you what, hey, we got this program where we just take your last 12 months bank statements, we add up all your deposits, divide it by 12, and that's the income that we use to qualify you for the loan. Okay, that could work for some of you, but what happens in that case is you're generally going to get terms that are less favorable than if I, as a loan officer, knew what I was doing and I could actually qualify you for a standard conventional mortgage. But, hey, taking your bank statements for the last 12 months and averaging, the total of all your deposits, that was way easier for me. So it it wasn't as much work for me, which is great, but it was not as good of a deal for you, right? So it's one of those things where you really need to work with somebody who knows what they're doing. Okay, I can't stress that enough. I have this conversation with folks darn near every day. I spend a lot of time explaining to people why what they were told by somebody else is wrong because the other person didn't know what they were doing. So for those of you who are self-employed, I can't stress enough that you have to work with somebody who is an expert at self-employed borrowers. And I can tell you, those of us out there who know what we're doing, we are few and far in between. I'm a little rare breed, if you will, in the mortgage world. I actually have a background in commercial lending, so I understand, cash flow analysis and, just business tax returns and business structures far differently than what your typical loan officer does, because I've been trained to be able to look at those things and really understand, a business's solvency, if you will. Okay, so I'd love to help you in the mortgage process. Again, my name is Dan Moralez. I am America's Mortgage Man. You can find me online at danmoralez.com. That's DANMORALEZ.com. My phone number is 616-931-4629. My NMLS number is 709-729. And of course, Northpointe Bank is an equal housing lender. Hey, two quick favors I want to ask you, though, okay? If you are going to buy a house or you need a mortgage, do me a favor. Would you please reach out to us, connect with us, give us an opportunity to serve you? We do offer loans in all 50 states. For the most part, most loans are available in most states. There are some loans that we don't do in some states, but reach out to us, give us an opportunity to serve you. We would love to connect with you and see how we can, offer you maybe a solution that you're not seeing someplace else. The other thing I would ask you to do, please do me a favor, share the podcast, write a review on iTunes, help us to grow our audience where, the more reviews people write, the more that, people will find this podcast, and ideally the more people will benefit from the information that we put out there. I've done this 29 years. I focus on trying to answer as many questions I can for clients, telling stories about the things where I see clients getting tripped up, because I think it has a huge value to folks to be able to understand these things, so that as you get ready to go through this mortgage process and you prepare for it, you have a better understanding. I just think it makes a big difference, right? And that was the heart behind doing this. Obviously, the other part was being able to generate some new clients as well, too. So I would appreciate it. If you're in the market for a mortgage, reach out to us. Let us help you, okay? Have a great day. See ya.